4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. They're both free downloads. Let's get started.
Hey, trader Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing some of the setups that occurred this week, and we're going to also go over some examples of the same repeating templates. There is nothing new under the sun. The most important thing I want you to get out of this video before we start is understanding the patience and the discipline to just sit on your hands and wait for the easy money, as Jim Rogers says, laying over in the corner, and all you have to do is walk over, bend down, and pick it up. Instead, a lot of traders get caught up chasing little minutia and movements and pushes and sweeps and gaps and hunts, and they're chasing all the little stuff, and they miss out on the easy, scalable opportunities. And so the important thing to get out of today's video is mastering the setups where it's really easy to make money on. And in between sitting on your hands and doing nothing else, not engaging in any other impulsive, random 50-50 or 30-70 type of trading, trying to catch moves and make a little bit of money every day, and instead focus on scaling up and growing your trading business with setups that rinse and repeat on any instrument week after week after week. The simple basic model are using trigger days. We have a Monday, Wednesday, Friday template. We have first red day, first green day signals. We have inside days. We're going to just go over the same repeating things. One of the questions I received was, does this still work? And my response to that is that there is nothing new under the sun. Markets don't change. They've been doing the same things from the beginning of time. What's important, though, is that the trader themselves, the biggest variable, has no consistency in their daily process, their daily routine. They have no emotional control. They actually don't understand what they're trying to do. They go there and try and trade every day, and they're a reckless, degenerate gambling type of behavior on days where they have low probability, low edge, and they do destructive, self-sabotaging things that destroy any of the good results. And so today the emphasis is just realizing how easy this can be if you just have patience, discipline, and the wherewithal to just wait for the easy money laying over in the corner. Everything is simple if you make it simple. And breaking things down into little steps backwards from your end goal to where you want to end up. And then having the patience and the simplicity to be able to execute, place an entry, a stop loss, and a take profit level. And as my friend Steven says, the best ones are set and forget, OCO, walk away from the screen. Another question I received was, how do you manage yourself once you're in the trade? And sometimes if you are facing difficult behavior, you're getting out too early, you're moving your stops to break even too early, whatever that may be, often the best way to overcome that is to size down and use set and forget type of orders. So that way you either get stopped out, it hits your profit target, you get away from the screen, you go to break even, and you let the trade play out. Because otherwise, in between, the only thing a trader can do is actually damage a potentially winning trade setup. They get out too early, they get in too late, they chase a move, they oversize too late, they oversize on poor quality setups, they undersize on high quality setups. Little things that over time keep their results at 50-50 or less than 50-50 as opposed to scaling up and growing their trading business. We'll walk through some major pairs, but I want to emphasize to traders, there is nothing new. The same things repeat every week on different instruments. We have week 1, week 2, week 3, week 4. It's the beginning of a new month starting on Monday. We have a non-farm payrolls week, and the cycle begins again. We'll look at various instruments, and we're going to just demonstrate that all you have to do is be patient and allow the templates to set up. Not trying to chase every little swing in a market and catch this and catch that. We're looking for the scalable opportunities, whether it's on the front side or the back side of the week. Now let's just review this real quickly. Front side of the week, Monday, Tuesday, Wednesday. Back side of the week, Wednesday, Thursday, Friday. Now, people make comments like, oh, I've been following Stacey for 2 years. I have no idea what he's talking about. Well, I don't know how much simpler it can get. I mean, Monday, Tuesday, Wednesday, that's the front side of the week. Monday opens the week based on Friday's closing price. And what do I mean by that? Well, when a market closes on Friday and it opens on Monday, they base whatever it opens up at or the movement on Monday relationship to Friday's closing price. It's up 1%. It's down 1%. It's made a new high. It's made a new low. Monday establishes the new range. Now, traders are trying to trade that range, and there are Monday trades, especially when we start a new month. Markets that break out can offer us opportunities for 3 session setups on a Monday. Day 2 typically expands the range, but at day 2, we can have a range reversal. Now, as my friend Steven says, pick one setup and master it. So we have day 2 range expansions. We have day 2 range reversals. Wednesday is the midpoint range of the week. What does that mean? Well, that's the middle of the week. It's very simple, common sense, middle of the week. So often we build the box on the front side of a week. Now, this is a non-farm payrolls week. I'm going to emphasize some key points because this week is a non-farm payrolls week. And often that may morph into a Friday non-farm payroll signal. So here's the point I want to make before we just tiptoe forward is that it's a non-farm payrolls week. You only need 1 or 2 trades if they're ideal 90-10 candidates within a week to significantly scale up your account. It's not about trying to catch every little move in a market. We're looking for scalable opportunities that rinse and repeat, where traders have the patience within their session, if the signal presents, to execute that trade, lock in the money, and walk away. Now, heading into a non-farm payrolls Friday, we're going to have, again, potentially day 2 reversal or expansion opportunities on the backside of the week, or consolidation into a Friday non-farm payrolls trade. Now, let me emphasize, I am not trading a non-farm payrolls news release. But after the news is released, if there is a playbook template setup. Now, on a non-farm payrolls, if it's a Friday, we could have a Monday, Wednesday, Friday template. If you're not sure what that is, I went through it in the last couple videos. Go and look, study those videos. We can have Tuesday, Thursday templates. We can have Monday, Wednesday, Friday templates. But by the time we open the week, we'll have an opening price, a high low, and a closing price at the end of the week. So I had mentioned yesterday in the previous video that I like to look for range expansion opportunities. The beginning of a new week, we may have a market that goes Thursday, Friday, Monday, and gives a range reversal trade. What do I mean by that? Well, let's take a look. We're looking at a chart of the Euro USD. It's a 30-minute chart. Now we're just looking at daily separators on this market. Well, again, traders are trying to figure out how to catch the high and catch the low constantly, and I'm looking for opportunities where ideally they're ACB, they're not coming back on the day, or they're scalable for a parabolic trade if they present in the US window. How do I break this down? Now, I constantly keep repeating signal, setup, behavior of the trader, timings, levels, behavior of price. Now let's just go back to some simple understandings. The smallest time frame that I am trading from is a daily high-low level. Okay, and what that means is that I might get in on a 1-minute chart, but it's about the level, and I'm potentially targeting the opposite side of the range. That's what I'm targeting. Now I'm using the smaller time frames and the signal days, so we have our first red day, first green day, our inside day signals, but these levels are where we're targeting. We could have a high of a month, high of a week, high of a day, low of a month, low of a week, low of day after the signal. And then do I have a setup into the session? There are 3 sessions, Asia, London, New York. We talk about that. So what's important to grasp out of this is that we're looking for opportunities where we have an entire range for profit targets at a minimum, regardless of the instrument. As this says, any instrument. That's because it rinses and repeats on any market. Now, some markets are going to go out on extended runs and they're not going to give you a signal. But I'm not trying to trade any market. I'm looking for the setup where it's going to be easy to make money on, not figure out every little push and gap and sweep and hunt and rocket science type of trading. Where's the same setup over and over and over again this week where I can make easy money? Now, gurus don't like that because they want you to believe there's a mystical, abyss where you have to equate all this knowledge and mystique to something and attribute it to an algorithm and everything else. Who cares? Where's the simple setup that rinses and repeats that I can make easy money on? And then in between, the challenge for you and me and every other trader out there is not to do stupid things that's not part of your plan that damage your trading account. Because if you rinse and repeat the same setups that make money, why would you want to do anything else? That's common sense. But the problem is that a lot of traders can't stick to the plan. That's reality. They just can't stick to the plan. They want to get some science projects in between. And that's what blows up their trading account, or they do damage. Then they go back, and by the end of the week, they try to make it all back again, and they get back to the high water mark, or they get a little bit of profit, or they get lucky, or they do some damage or whatever. But instead of just sticking to rinse and repeat trading setups that make money. Now, I said a moment ago that everything starts from Friday's closing price. And this is Monday. We have a market that starts off on Monday and moves higher away from closing price on Monday, the opening range of the week. Now, here's the thing. There's traders trading in Asia. There's traders trading in London. There's traders trading in the New York session. And on the day, they're looking for trading highs and lows off markets. And I'm talking about, again, letting the weekly template set up. Now, there are going to be opportunities at the beginning of a week. And you'll notice that if we work backwards, Friday closed in breakout. Friday's closing price was outside of Thursday's high-low range. So it closed in breakout. Friday was also the high of the week. Now, in this particular case, it wasn't actually the high of the month, but it was just below the high of the month. The high of the month was just slightly above it. So we have a market that's closed in breakout, and right off the bat Monday morning continues to go higher before pulling back in our London window and going into consolidation, also closing in breakout. Now, here's the thing. I don't know how many instruments traders are following. It doesn't matter, but obviously the Euro USD is a major pair. It trades in the London-Europe session. Obviously, Euro and Pound cross pairs and the Swiss franc will offer traders opportunities in the London window and occasionally in the US session also. But more importantly, what happens is that because it closes in breakout, this is an instrument that we could look at the following day to see how it behaves into our timing window, but we're on the front side of the week, day one, day two. We open up on Tuesday in breakout, and that market breaks down. So we've closed outside of the high of month level. So we've got two examples of where a market comes up on our watch list. Why does it come up on our watch list? Because it closed in breakout. Monday closes in breakout again. But on Tuesday in our London window, Europe London window, it breaks down. Now, I said a moment ago, Friday's closing price is where everything starts from. That's our auction point. It breaks down below closing price, pumps back up into our US window in our New York Open, our 9:30 New York Open, breaking down and closing in breakout to the downside. Now, here's the thing. This is actually a range reversal. So we've got a market that's pumped up. Thursday is where the pump began. Now, again, we just talked about front side, back side of the week. We have Wednesday, Thursday, Friday forming our breakout area. Now I'm just going to say, so there's going to be traders in Europe and London that have taken this short trade, a session opportunity. Why is it a session opportunity? Because we're still technically on the front side of the week. The market hasn't closed yet. And a market has broken out and now potentially failed. Most breakouts fail. Now we also have a trend line break. Now here's the thing about the trend lines. We're not looking at trend lines, but that's front side. We've now broken down the front side of a move, a market that was creeping higher, higher highs, higher lows, closing in breakout. Most breakouts fail. And we now have a first red day at the close of Tuesday. First red day, page 58 in the playbook. High of session, high of day, shorting opportunity if indeed it presents into the timing window. So just reinforcing, we went back, we started this video, we talked about patience, discipline, and the understanding of hunting setups. Versus, I caught the high, I caught the low, but where's the scalable opportunity? The market's broken down below Friday's closing price, where everything starts from, pumps back up. There's only two types of opportunities when a trade setup presents on any market, on any instrument, regardless of liquidity hunts, sweeps, runs, blocks, gaps, whatever else, and all the other stuff, there's only 2 setups on the day when they present. I don't care if it's a V bottom or an A top, trap and shift, or dump, coil and pump, or pump, coil and dump. Same thing over and over and over again. Rinse and repeat, regardless of what anybody else has told you. There are only 2 setups. And they can be trend trades, they can be reversal trades. The most important thing is recognizing whether or not you have that opportunity in your session. If the train's already left the station, being willing to sit on your hands, or if there is a low-hanging fruit trade opportunity, the same setups will apply on a smaller time frame fractal basis. Now, this is another mindset connection, is that you don't have to trade every move. It's recognizing whether or not you have the setup that you're after. So some traders aren't interested in trading on the inside, even though there's a first red day follow through and a capitulation back to where the pump began. But as my friend Steven says, they end violently. And this blow off is a vertical collapse and an opportunity for traders, once this level has been breached, to be tightening up or exiting the trade and locking in the profits. Let's just review this quickly. Thursday, Friday closing and breakout. Monday opening range establishes our new high-low range and may also potentially establish a higher low level for the week. Opening range initial bounce from the playbook, where by the time Monday and Tuesday have printed, one of those extremes may tend to hold for the week. So we have front side of the week, Monday, Tuesday, Wednesday, blowing off on day 2 on the backside, and now potentially offering a parabolic reversal trade setup opportunity. Let's just go back to our first slide again. Opening range, range expansion. Now, in the case of the euro, we expand Monday's opening range, but it's actually a reversal inside of a range that pumped up. Midpoint range blows off. We break out again on day 2 on the backside, and now potentially offering us a parabolic opportunity on the backside of the week. And this is what we refer to as the escalator, right? The escalator down, the creeping trend down. That's the escalator. We're taking the escalator down. Still some great session trade opportunities if they present in your window. We had obviously the New York collapse on day 2 on Tuesday, New York Open. We have the creep, the follow through the following day, and the blow off in Asia on the backside of the week. We have a reversal opportunity in Europe at the low of the week, back inside of the range, and the parabolic coil into our New York session open for the explosive elevator trade back up to where the breakdown occurred and into the high of the month level. That explosive move is what we refer to as the elevator. The explosive move, we've got shorts, lower level shorts following the creeping trend, or they're holding on, they're position traders, swing traders, whatever else, higher time frame traders, and the explosive reversal on day 2 on the backside after the reset on Wednesday. So when we get to Friday, the closing range of the week, it's not unusual to see now, after that large explosive move, we've cleared out all the higher level shorts to go sideways and close out the week in consolidation. In this particular case, the closing range of the month. So let's just paint a picture here. Let's just say we identified a couple of opportunities just in the New York window. We could have had our New York session opportunity, and we could have had our New York session 5-star scalable opportunity on the backside of the week. 2 trades, nail and bail. We may have had other opportunities that were better on other instruments, but there's 2 trades where we had an opportunity, again, session, nail and bail, and a 5-star scalable opportunity for a 3-session parabolic explosion. Now, it doesn't matter which trades traders want to take, but there's just 2 simple opportunities. We had an explosive blow-off on day 3 in Asia for traders recognizing the creeping trend and the coil. Traders from the ACB Masterclass will go and look at this for homework and recognize there was no other option other than to be short for the coiled up collapse blowing off for easy money. Easy money. Now, traders on the front side who are going long get caught up high. This is where traders' behavior can engage. It was going up. It's a trend. They buy it. They
want to average into a loser. They hold on. They're saying, well, this was a trend. It was going up. Or they don't take a stop out. They hold on to a loser until it gets to a point where it margins them out or it blows out their account, or they just live in hope mode. It comes back up, and it still doesn't allow traders who are long up top to get out of a losing trade. Now, rinse and repeat is this. It doesn't matter what instrument this is. It doesn't matter what template it is. We had a first red day. We had a market that took out the low of where the pump began after our midpoint range of the week and offered traders a couple of easy, scalable opportunities. And there was more than two. But just to point out, following the process, being patient, sitting on your hands. It's not about trying to catch moves every day. Where's the easy money? You'll recognize on the front side of the move, whether we were on the move from Wednesday, Thursday, Friday, or on the creeping trend down, these markets are MCBs. They might come back. They're auctioning. They're creeping. But the vertical parabolic explosion goes right through to the levels that we just talked about a moment ago. Level to level. Low of day through high of day and up into the high of month level. Level to level. Explosive range opportunities for easy free cash. Now we're looking at the Canadian dollar. Again, just a blank chart. We have daily separators. This is a 30-minute chart. So we just saw an opportunity. Let's just say traders hunted out one parabolic scalable opportunity on the euro. We had a great trade on Thursday in the New York session. Obviously, as we said, there were other opportunities in other sessions for session trades, but we're looking at the Canadian dollar now. 30-minute chart. Now we just, again, review the simple process on Monday. Friday's closing price is where the auction process starts from. That's where everything starts from. So that's our reference point when the new week begins. Price begins to auction back and forth. We break down. We had a market that came up on our watch list. Why did it come up on our watch list? Well, it's closed at the low of the month, the low of the week in breakout. Just keep repeating that once markets break out, they'll only do one of three things. They'll break out, pull back, continue to trend. They'll break out, they'll reverse and potentially fail and offer us a reversal setup, or they'll break out or not break out and stay in a larger trading range, which can be a weekly high-low range. But we have a market that's broken out again and closed back inside of Friday's range. So we've gone from out of balance, Dalton, and closed back inside the range. Now, again, simple process. Some traders are trying to catch every move and everything else. I caught this, I caught that. But I'm talking about sitting on your hands and allowing the templates to set up for scalable opportunities that are potentially not coming back. Tuesday, day 2, is our day that we said was our range expansion day or reversal, depending on how it sets up. Now, you'll recognize that we're expanding Monday's range on day 2. So the process begins in, obviously, Asia. So again, Friday's closing price is our reference point. I said that Monday, Tuesday, opening range and initial balance from the playbook. I'll just keep hammering home. Process, process, process. There is nothing new under the sun. Doesn't matter what market it is. Doesn't matter what any other person says. It's irrelevant because the same things keep happening week in and week out. This is how markets work. The same things happening. It's not about predicting. It's not about having a bias. It's not about anything else other than what setups make you money, and are you hunting them, or are you trying to trade and catch every move that a market makes because it's moving? Nobody gets a free lunch. Most breakouts fail. And we get to our midpoint range of the week. So we've had our explosive day 2 trade setup opportunity and the low-hanging fruit continuation in the New York session. Low-hanging fruit, page 96, the trend continuation. What that is that the train has left the station in an earlier session. I trade New York. I come to the screen. That trade is still in process. It hasn't reached its final destination yet. It's day 2. We're in an ACB template. And that is the low-hanging fruit opportunity to position yourself in the existing move back to the other side of the range. Page 96 in the playbook. So one of the things I want to just kind of mention here is that this is a breakout of Monday's opening range, but you'll also need to understand we're actually inside of a larger trading range. Breakout, pullback. So although we've closed in breakout of Monday's range, this is just a larger trading range. That's an important thing to understand. And higher time frame selling is still up top.
So what that means is in your headspace understanding, well, that on the backside, we could still have a market that dumps down. We had selling occur up here before. Why can't it happen again? But here's the best part. I'm not going to do anything until the market actually gives me a signal. Now, one of the other things that's in the playbook that we repeat, you don't count little bars and pushes and sweeps. We have a market that is now broken out in a new week, new timing cycle. We have 1, 2, and on Wednesday's close, we break out again on Thursday, and we have 3 days of breakout traders now in the market back up into where the breakout occurred on Friday. Page 51 in the playbook, 3 days of breakouts in the market, whether you're long or short, could potentially offer us a signal. That brings a pair up on our watch list. Now, you can keep your watch list really simple. I'm just looking at major pairs. We're not looking at any indexes. We're not looking at metals. We're not looking at energies. All we're looking at is the simple, basic, major currency pairs. They show up with these patterns again and again and again. We're going to have week 1 templates, week 2, expanding the range in a new month. We start a new month on Monday. It's a non-farm payrolls week. So we may have a template that morphs into a non-farm payrolls Friday. But what I want to emphasize is the same behaviors repeat on any instrument. Now, the challenge is always, where's the best one today? Where's the best template setting up? Maybe it will be a cross-rate pair. Maybe it will be a metal. Maybe it will be an energy. But what setup are you hunting? As opposed to catching moves, which one's scalable? The ones that aren't coming back, they're scalable in size, whether it's 50, 75, 100, or 300 pips, or 500 on a monkey hammer, or more. But what setup are you hunting? The same things happen over and over again. So when people say, I have no idea what you're talking about, well, what are you hunting? What setup are you hunting? My friend Steven only trades reversals, and not until after 10 a.m. So what setup are you hunting that makes you money? You don't have to trade every single market and every move. But what setup rinses and repeats for you that you can hunt every week that makes you a lot of money? And in between doing nothing else, sitting on your hands and waiting until those opportunities present. Tracking some markets, tracking your favorite market, and hunting it to where the opportunity presents where you almost can't lose. That's called 90-10. Not trying to catch highs and catch lows and all trades are 50-50 and I risk 1% on every trade. Where's the scalable opportunity that I can make a lot of money on? Just repeating as well, there's signals. Those are signals, right? So just because a market has 3 days of breakouts doesn't mean that, oh, I have a trade. No, how does it set up on the day? Allow the market to set up. I don't have to catch the high. If you're trading Europe, maybe you recognize that. And that's the beginning potentially of a backside opportunity starting to set up. Now, the important thing is, okay, I might have an opportunity now where this could continue to break down on the backside. But my mentality typically will be I might lock in profits and leave a trailer. This has the potential to go, but it could also come back. We have markets that, if they're not on the backside, might continue and trend on Friday, day 3. 2 types of trends, and I repeat this over and over again, reversal or trend trade opportunities. But Thursday closes as a first red day. First red day, page 58 in the playbook, is a high of session, high of day shorting opportunity if indeed it presents. So I said a moment ago, there's only 2 types of trade setups on the day in any setup once it comes together into the session in the timing window. Pump, a longer coil, another pump, and a coil right into our session window Friday, day 3 on the backside of the week after our first red day signal. Now, this is a 30-minute chart. We talked about page 29 in the playbook, the basic model for trade entry criteria, even on our 30-minute chart. Now, this is an ACB opportunity. Now, just coming back to understanding that we have traders in the money. If we just step back, we have traders in the money on the front side of the week. We have an old saying, nobody gets a free lunch. At the end of the month, the end of the week, this is a setup
as opposed to the euro going into consolidation after having an explosive move on day 2 on the backside. This is the setup to go after traders who are in the money. Now, I said earlier that everything starts from Friday's closing price. Monday starts the pump. We have pump, pump, pump. 3 days of breakout traders in the market. A reversal, closing below the open. Also closing below Tuesday's closing price, a first red day signal. And the parabolic collapse back down to where the auction process started from on Monday, the opening range after our first red day signal. Easy money. Now, for traders in the masterclass, you'll recognize the ACB template for easy free cash, a scalable 5-star opportunity. Entry, scaling in if they choose to scale in, placing your stop loss, a break-even level if they chose to go to break-even after clearing the low of day level and walking away. An ACB opportunity day 3 after our first red day signal on the Canadian dollar. Now here's the thing, if you took 2 trades, the euro and the Canadian dollar, Thursday, Friday, both on the backside of the week, that could have significantly compounded your trading account. These are scalable trade setups as opposed to catching every little move. Now that's up to a trader to decide how they want to approach the market. It's called discretionary trading for a reason, because once traders close the doors and they get behind the keyboard, they can have a plan. And, of course, how many stick to the plan? How many actually are hunting setups that make them money? Whether they just trade reversals. My friend Steven trades reversals after they break out and not until after 10 a.m. Now, these are scalable opportunities. But what traders do when they get behind closed doors is an entirely different story. That's where the behavior of the trader becomes the number one issue, because we just saw 2 easy free cash opportunities. Now, next week, we're going to see the same thing. They're going to be on different instruments. There's going to be different types of setups. It might be on a Thursday. It might be on a Wednesday. But we're going to see the same repeating behaviors of the markets week in and week out. First red day, first green day, inside day signals, 3 days of breakout traders in the markets. The same things happen again, and again. Now, the most important thing, obviously, if you're trading Asia, you could have the yen, New Zealand, Aussie dollar cross pairs. If you're trading London, pound, euro, Swiss franc pairs. And, of course, the U.S. session, we can have the U.S. Canadian, U.S. yen. But the pairs that are going to obviously trade heavier in their domestic country markets. So we have the Japanese yen. Now, we go back to the simple process. Everything starts from Friday's closing price. Monday, the opening range breaks the low of month level and closes back inside of Friday's range. Friday closed in breakout, and we had Monday take out the low of month level. Thursday's high of day level is still intact. We also closed as a first green day on Monday. The close is above the open, new week, new timing cycle after breaking out of the low of month level. Every single trader has these levels. Remember, I mentioned that we're trading the range. The smallest time frame we're trading on is a daily level. So time frames are relevant. It's about the setup. You can get in on a 1-minute chart. You can get in on a 30-minute chart. Obviously, when we have the setup, we want to finesse the tightest opportunity entry to minimize our risk and maximize our gain on a trade. Now, I said there's only 2 types of templates, pump, coil, and dump. And when we dump down first, we may get a dump, coil, new timing window, new timing cycle, and pump opportunity. It's a first green day signal, which is a low of session, low of day buying opportunity if indeed it presents. In this particular case, the Asia session traders had the opportunity to position themselves in the market. Now, this is a 30-minute chart. Now, we can break this down and go down to the 5-minute and use the basic model for trade entry criteria, but I'll encourage traders to go and do the homework themselves. What happens when markets break out? They either break out, pull back, and continue. They break out, reverse, and fail and operate a reversal setup. It's day 2. Day 2 on the front side of the week. Now, this is a range expansion, but we're also reversing the range from the dump.
Day 1. Day 2, explosive range expansion opportunity in the Asian window. Now we head into Wednesday, the midpoint range of the week. Day 1, Day 2. Now, Wednesday's the midpoint range, but we may also now be in a 3-day template because Tuesday has formed the low of month level. We're in breakout. We've closed up above Thursday's closing price. Now, this is where we get into potentially a 3-day setup. 3-day setup from the playbook. 3-day setup, page 31 in the playbook. And all this is I just mentioned, high of week, low of week, high of week opportunities. And what that is when we obviously have now Tuesday forms our day 1. Why does it form our day 1? Because we broke out again on Wednesday. We broke the high of day level on Tuesday. We broke out again on Wednesday. Until a daily level is broken, no day count changes or anything else. It's Monday, Wednesday, Friday templates, but we may now have a 3-day setup. What that means is that Thursday's the 3rd day from the low of month level. There are 2 types of trades on a day 3. Trend trades and reversal trades. Now we're trading the Japanese yen. The Asian session may offer traders an opportunity if indeed it presents on the day. Traders from the masterclass will recognize that this instrument will come up on our watch list because it's closed in breakout on Wednesday. Now let's go back and just look. Thinking simple. We have a high of week level from the previous week. We have another high of week level from the Friday levels that this market may potentially be targeting week 4, last week of the month, last couple trading days of the month in a parabolic coil. This is a parabolic coil. Build your muscle memory, go back and study. Day 1, higher highs. Day 2, closing in breakout in a larger coil. A dump and pump now where we are also potentially expanding the range and going after traders who were short in the money. How does price set up into our Asian window on the day? Now, there's only one direction. This traders from the masterclass will recognize it's come up on our watch list. This is not the 3-session ACB template, but certainly it offers traders the ACB parabolic coil. You can only trade in one direction out of this coil for an explosive, easy money session opportunity, a scalable 5-star opportunity. Why is it scalable? Because all time frames are driving this move. Now, what's important to recognize is as this blows off on day 3, to be locking in the money, taking profits. This is not a 3-session reversal and 3-session range expansion. This is a blow off on day 3 and also the last 2 trading days of the month. A scalable 5-star opportunity at the beginning of the day. So we had an Asia session opportunity on the backside of the week. We had a Euro USD opportunity in the New York session on Thursday, day 2 on the backside of the week. And we had a US dollar Canadian 5-star opportunity in the New York session on Friday, closing out the week. 3 simple, very scalable trade setups for easy money. And all traders have to do is be willing to sit on their hands, be patient, and hunt out easy money. Not catching highs, catching lows, and then saying it doesn't work. It works sometimes. It works when you want it to. What setup have you mastered? You, the trader yourself. What behavior have you mastered? Do the things that work and stop doing things that do damage. Get control of your behavior, master your setups, and understand where it's really easy to make a lot of money on, as Richard Dennis says, in a very short period of time. Keep things simple. Nothing is going to change. Rinse and repeat, focusing on 90-10 trading setups, and stop doing things in between that do damage to your trading account. This is a winnable game. Keep things simple, traders. Have a great day. Make this your best trading week ever, and may the markets go with you.